Today is Monday, March the 3rd, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Alan Bush, ADMIS Senior Financial Economist, and Mark Bowman, ADMIS Senior Global Market Analyst. Starting with the financial markets this morning, Alan, monetary policy. What has changed in the outlook for the Federal Reserve monetary policy?
Okay, well, it now appears that weakness in the global economy is beginning to adversely impact the U.S. economy as well. In fact, to the point where markets are predicting that the Federal Reserve will be more accommodative this year, joining some of the other major central banks, the Bank of England and the European Central Bank, in cutting interest rates. So, in fact, now it looks like the Fed is on track to lower its key rate, the Fed funds rate, by 25 basis points at the June meeting. That was what was thought last week. However, it appears now that there will be another rate cut in September. So probably two rate cuts this year factored in, and that's a big change from not too long ago. So I'm pretty confident that we'll see a more aggressively accommodative Fed.
And Alan, how do you see a more accommodated Fed open market committee affecting financial futures markets?
Okay, so while global economic weakness is a headwind for stock index futures, at least in the near term, the increasing probabilities of most major central banks now, including the Fed, becoming more accommodative, of course, not the Bank of Japan, that's its own separate set of fundamentals. So central banks, for the most part, will be cutting rates at a quicker pace. And I think that probability will become more of a long-term bullish factor for stock index futures. As far as the interest rate markets, we have seen some strong gains over the last couple of weeks. Also, interest rate differentials now becoming just neutral for the dollar after the dollar had enjoyed an advantage. That's no longer there. Also, the gold market is likely to continue to advance, and I would not be surprised to see new record highs in the gold market. And as far as interest rate futures markets, I think there are a lot of opportunities in the long side in light of a more accommodative Fed, especially at the long end of the yield curve. That would be, of course, the 30-year Treasury bond futures, which appear to be reflecting additional buying interest in light of perceived increasing creditworthiness of long-term U.S. Treasury sovereign debt.
Lastly, Alan, what major economic reports and events are scheduled for this week?
Okay, Wednesday we'll have the Fed's Beige Book on the economy in advance of their FOMC meeting. Then Friday, the employment situation, and then Fed Chair Powell speaks also on Friday. So those are the key events coming up later this week.
Thank you. Mark Bowman, last week there was an update from the ICCO. Can you tell our viewers how you see the cocoa market moving forward?
Sure. Well, so that update was the first official assessment of the 24-25 global supply-demand balance. And they showed a net surplus of 142,000, and that's the first surplus in 4 years. Total world production, 4.84 million tons, up from 4.489 million last year. And that production number was revised up from a previous number of 4.382. Now, this is the third largest on record. The previous ones were 5.04 million and 5.24 million back in earlier this decade. Now we're about 5 months into the marketing year. The main crop is more or less wrapped up, so we'll be looking at the mid crop, which is yet to begin. Another thing on grindings, they're down a little from last year, down 4.65 versus 4.885. And so seems like the high prices are starting to have an effect on demand, which is helping generate this surplus. And just as a comparison, we got 142,000 ton surplus for this year versus a deficit of 441,000 last year and 65,000 the year before and 216,000 before that. This puts our stocks usage at 31.8% versus 27% last year. That's still, though, the second lowest on record. So it's a bit looser, but it's not like it's that loose. Things are still tight. The dry season is ending in West Africa, and we seem to have what seemed like a normal start to the wet season with a gradual increase of rains, but conditions have turned less wet over the last week or so, and it's still very hot there. So we could see some more drying soil. So this weather is something to watch closely.
So looks like tight conditions will remain.
Yes.
Mark, one more question for you regarding the cotton market. What did the USDA Outlook Forum tell us about the cotton market situation for 2025 and 26?
Okay. So they lowered planted acreage for next year, kind of what was expected, 10 million acres versus 11.2 last year. But some traders think that the actual acreage could be down further given the weak action in the market. Cotton market not doing a very good job of bidding for acres. On top of that, they left production, actually increased production from last year, but we need to see cooperative weather for that. It's still, early in the season. They don't even have it in the ground yet. Likewise, they put stocks use at 37.2% versus 38.6% last year. Better than the year before, 27.7%. Are looser than that, and and still above the 10-year average of 26.5%. So not a very tight situation going forward. They did increase exports by 2 million bales, but that might be optimistic given all this tariff talk. That stocks usage ratio at 32.7%, if that holds into the May supply demand report, that would project to somewhere around a December contract price around 64.60 based on previous years market action on that report day. Friday's low was 67.80, so we're close to it. Weather in southern Texas and the coastal bend regions and some northern areas are experiencing drought. The major area in West Texas has escaped the worst of that, but they are abnormally dry. And parts of southern Georgia are also under drought. So these areas will need some rain ahead of planting. The big issue remains demand, and it is not very strong. But you have uncertainty over the global economy. U.S. is most of our production goes towards exports. We've lost sales to Brazil over the last year. So if their crop is strong, that competition is going to remain to be strong.
Thank you both. Remember, the views and opinions expressed today in this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, if you'd like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.